All right, welcome to another weekend video. This is Enda here with bullwaves.org, and I'm going to go through the markets. We'll start this the same way. You know the deal. It's going to be the Elliott Wave perspective of the markets, and let's see what's happened this week, and let's see what's in store next week. All right, finally, here we are on Euro Dollar 4 hour. I used to have it. There you are. There's the label. Finally, it looks like that we have reached top in wave B, and we seem to be making an impulsive move lower to begin wave C down here. So overall, still looking at an A, B, C down into wave D of the triangle, and then we should go A, B, C up into wave E of triangle. And that'll complete wave B. Obviously, this will take a bit longer, about here somewhere, God knows. But we seem to have we flatlined this week, and then we move lower in what seems to be an impulse pattern right now. We'll look at that in a few minutes. We've got three waves down. We can parse this out as a three-wave pattern up. So we're still looking at a 3-3-5 flat move lower. And the top this week came in right above the previous wave B, so just we tipped above the previous wave B and then headed lower. So it looks like the divergence that has been underway over the last week or so on the 4 hour chart is now going to take hold, and we will now cycle downwards into wave C. We'll see how that goes next week, but that's the idea, general idea. Here we are, the hourly chart. Where'd my hourly logo go? There. The hourly chart, that's the top we reached in wave B. Again, this was just a pip above the previous B wave, and now it looks like we've got 5 waves down. Yesterday I was looking at this as a possible triangle. So we had a 1, 2, 3, a triangle, 4th wave, and now a nice spike lower in wave 5 of 1. So complete 5 waves down in wave 1, and maybe we'll get a 3-wave correction to a lower high in wave 2, and then we can head lower again. So it'll, if this pattern is correct, we'll see a kind of a stepping lower over the next probably the guts of a week. Next week is probably going to see wave 1 down, and then we'll work on wave 2 up. So a series of steps lower to create a kind of a head and shoulders pattern in wave 1 and 2, and then we'll head lower. We should accelerate down into wave C, or wave 3 of C then. Okay, so let's move on. This so basically euro dollar, we're cresting the top of wave B, and we should head down into wave C. Okay, so pound dollar, excuse me, I've taken a different tack on pound dollar right now. You can see the long-term pattern has been an A, wave A up, 3 waves down in wave B, and that bottomed out in March of 2020, and then 5 waves up into wave C. So we've got a 3-3-5 pattern in wave 4. So it's a flat correction. We should break the previous wave A high, so that comes in at about 143.80, and that'll be 5 waves up in wave C, and then we should head lower down into wave 5. So we've still got the top of wave 4 to look out for. Right at this point, it just doesn't seem viable anymore that this triangle idea was going to stay intact. It seems that we're heading straight for a flat and then right down again. The 4 hour count you can see right here. We've got wave 3, possible triangle, 4th wave. It's a tight one, but it still works. And off that, then we've got a wave 1, 2. This was really the move here up into now labeled wave 3 was really the straw that broke the camel's back there, because we just pushed too close to that invalidation level. We double topped it there yesterday evening, but it seems like we're heading up in 5 waves in wave 5. So I've got 1, 2, 3 complete. Wave 4 is possibly still underway. I don't really know. But we do have a corrective pattern playing out right now. It's most likely fourth wave, and then we'll head higher into wave 5, and we should break 143.80 to complete at least in wave 5, and then we'll see whether wave C will top out there, head lower again. Okay, so that's is the hourly count here. That's the 4-hour count. This is the hourly count. We have that pattern here in same pattern in the 4-hour count. It looks like that this could be developing into wave 5 of 5. So we have 1, 2 extension in wave 3, then an A. This is where we got really kind of sticky during the week here. This fourth wave correction here was really hard to kind of navigate, and I really couldn't figure out what the heck was going on throughout the week. Really, we had what seems to be self-evident now, but it wasn't while I was looking at it. Was wave A down, and then an A, B, C, D, E in wave B, and then a wave C to a slight new low. So we've got an A, B, C in wave 4. And now we look to be heading higher in 5 waves again. So we've got wave 1, 2, 3. We should head up. Again, the 143.80 level is, let's say, the minimum target for wave 5 of 5. So let's look for that next week. Okay, so dollar yen. We seem to have bottomed in dollar yen. We seem to have bottomed in dollar. Well, it's pretty obvious that we bottomed in dollar yen. Interestingly enough, we have a small 5-wave pattern off a corrective higher low. So this is the 4-hour count here. I found that I suppose this move could be mind-boggling, really, but in some ways it's kind of like what else could we expect, really? Given the fact that the US government seems to be hell-bent on destroying the economy or completely socializing the economy, I think that's probably the best interpretation. But I don't think they want to destroy the economy. I think they actually want to just take it over, you know. And by announcing a $6 trillion excuse me, it wasn't that long ago when the whole world economy was $6 trillion. So here we have the US government wanting to spend $6 trillion, and they can't even fund next month. It's a joke, is what it is. But if you're trying to collapse a private economy, this is how you would go about it. Really, you completely choke out all private investment, and that this is one way to do it. And they seem to be on course to do that right now. Okay, it's a long wave right there. For the moment, it looks like we have either a 1-2-1-2 pattern or a large one and running flat wave 2. So let's get into the hourly chart here. I'm looking at there's a myriad of ways you could actually kind of count this right now. You could go that this is wave 1 and 2, and then wave 1, 2, and then we're heading higher in possible third wave. I have kind of sliced it down the middle, really, and we've gone for a 1, 2, 3, a very long drawn out kind of triangle fourth wave, and then a spike higher into wave 5. It ain't ideal, I'll give you that, but it is one legitimate way to view this. Oh no, actually that'd be wrong, wouldn't it? Forgive me. I would have to go here. Forgive me, I didn't realize that. Go away. We've got, anyway, a 5-wave pattern into the recent high. Then we've got wave 1 and 2. And again, another kind of a rally to just blip above the previous third wave. and then a decline in a corrective second wave. So we've got 5 waves up, possible 3 waves down. It's a very messy pattern. You could also view it like this: wave 1 up in the previous high, and then this could all be an A, B, C as a running flat. And it may be more viable at this point. I don't know. The one thing I do know is that we have a 5-wave pattern, either complete or still developing, out of this week's corrective lows. So we've got a rally, higher low, rally, higher low, rally. So at this moment in time, it's looking pretty bullish. It's kind of it's going in line with the bullish wave count. We haven't got a let's say an extended and sustained rally in a third wave yet, so maybe we're building towards that next week. That could be the case. If it is the case, then we should see 5 waves up, a 3-wave correction to again a higher low in wave 2, and then we start really putting the heat on towards the upside. So for the moment, anyway, we've got five waves up in a possible wave 1 of 3 developing today. Maybe we complete this wave 1 today, and then we correct on Monday. We'll see how that goes. Okay, it's looking pretty positive for the dollar. It hasn't translated into the Atlantic pairs just yet. I think it will eventually. Well, maybe it's begun in euro dollar. I don't know, but definitely in dollar yen, we seem to be. It's leading the way. We have the recent extreme low in January was 102, and now we're trading 109. With a recent high at 110.95, so almost 111. So 102 to 111, that's a pretty significant move in dollar yen, given the fact that over the previous year it barely went anywhere. So we've got impulsive patterns building at smaller degrees, and we're still pointing higher, which does not augur good for the stock market. Okay, we still have a 1-2 pattern off the high. We haven't done anything this week apart from just grind towards the end of a C wave. It looks like a nice impulsive 5-wave move lower, and then a really kind of labored 3-wave pattern to a bearish lower high. We have left shoulder, head, right shoulder, and a neckline. If we break this neckline, I think we could accelerate lower pretty quickly. So that's 33. Or you could even bring it up. You could go, let's say, 33,600 or so, before we head down into a third wave. And if we hit a third wave, we should head lower pretty quickly. We probably break towards the lows of, well, we probably break 32,000, and we may even push in towards 31,000 if we do head lower in a third wave. So let's get into the hourly chart here. You can see whether you take this wave 1 and 2 here, or you extend it a little bit lower. It looks like we've got 5 waves down, and then 3 waves up. We're still at a bearish lower high. We're flat we're flat at the open. Spiked higher in the futures. We're flat at the open. Let's see if we start selling today. I found the reaction yesterday to that blowout budget was subdued, I suppose, to say the least. I mean, we traded to a new weekly high, but you could hardly say it was a resounding success or a resounding, let's say, point towards inflation. We still have 3 waves up. We still have a 3-3-5 pattern. We still have a lower high. We still have the possibility of a second wave. We're coming into the 78.6 retracement. Whatever effect, let's say, endless government spending could have had, it's had its effect now. It's already priced in. I think it's downhill from here, really. And if you're looking at, I don't know I posted some articles or some links during the week there to the treasury auctions that have been happening this week, and of course the repo kind of crisis that's developing again. There doesn't seem to be enough dollar bonds or dollar US Treasury bonds out there, especially for the repo market. Repo market is kind of looking a bit like the 2018 saga again, and really, I suppose this is kind of indicating that there is no real investment worth looking at in terms of the banking industry. They're just parking any reserves they have. They're parking them with the Fed, and there ain't enough, overnight swaps to do. There's not enough bonds to repo at the moment. Well, I suppose Biden will take care of that, but who's going to buy them all might be another thing. Then again, you look at the treasury auctions that have happened this week, and they have, they haven't been screaming inflation; they've been screaming deflation is coming. The bond market is calling the bluff of the stock market right now, and the bond market is much bigger than the stock market. So we should sit up and take notice when the bond market is looking, at heading back towards record low rates. When everybody's screaming inflation, I'm going to go with the bond market on this, and I think that we have a real serious possibility of a significant bout of deflation coming our way pretty quickly. The bond market treasuries are pricing lower again. We had a 7-year auction, at 1.2%, 1.28% yesterday. Yields are falling. The market is scrambling for bonds again, and it ain't just a case, I think, of a positive correlation between stocks and bonds. I think it's a fear or maybe even not exactly fear right now, but just nowhere else to put your cash that is both safe and going to give you a return, especially when we are so hyperextended right now. And there are many crashes happening as well. So we have Bitcoin crashing, and we have the SPAC market crashing. We have numerous kind of preliminary crashes going on. So this may be pointing to something bigger developing here. Fear returning in the bond market, and smaller markets kind of dipping their toes into the downside again. I know you wait long enough, it's going to rain, but we do have a 1-2 pattern to the downside here. So let's see next week. Do we follow down? We're still hanging below the highs, and we still got 3 waves up to a corrective lower high. So I want 5 waves down next week. Okay, let's move on to gold. We still haven't turned over in gold yet. We're kind of flirting with a possibility of a top this week. I'm just in wait and see mode here in commodities at the moment, or in metals and commodities, because it seems that we've definitely hit a cycle high in terms of we're seriously overbought in commodities and metal right now. So it looks like we should start heading lower pretty quickly, but that just hasn't happened yet. So still waiting for a first down leg to come in gold to begin a C wave. It's been a good long rally. Maybe the alternate count is correct. Maybe it is a wave 1 up. If we go to the 4-hour count here, where's my label? There it is. I'm still banking that we'll probably see new lows to complete wave 4, but even if it is a case that we have now begun our 5th wave up, and that this is wave 1 of 5, we should see a significant decline into wave 2 anyway. So I think we'll probably, if it's a second wave, we'll probably head back towards 1750 again. We'll use this kind of a swing level here. This was a swing high and a swing low in around the 1750 level for a second wave decline. And you see on the hourly count here, you have a kind of this shoulder of support here in around that 1750 level. So I think even if the alternate count is correct, I think we'll still head down pretty significantly from the current highs to create a second wave and a bullish higher low. Okay, let's move on. Okay, crude oil has rallied significantly this week. I thought we had a nice five-wave pattern last week lower. The market kind of blew above the previous high. We haven't broken to a new high yet. Therefore, I can't dip my toe in here yet. I'm going to kind of stay hands off at the moment and just see where the pattern goes. It's a tough one right now. Maybe we're going to create a new high in a fourth wave. This could also be a B wave. The alternate count on the daily chart would be a B wave high. But I think, given the fact that commodities are so incredibly overbought right now, I think that we will see lower prices pretty quickly. It just this rally here has been kind of perplexing over the last while. I'm going to let it flesh out and see what we come up with next week. Maybe we'll get another impulse move lower, similar to what we got in March and into the beginning of towards the end of March. So let's see if that comes along our way next week. Okay, so the S&P, again, we're sitting very slightly below the recent all-time highs. We do have an impulsive move, impulsive move down, and a three-wave rally. We are at a lower high. This one could punch back up again. I wish I could. No, I'll leave the future to God. I don't wish to tell the future. We do have, again, a deceleration on the 4-hour chart. We have a lower high in RSI and MACD. On the hourly count, we have 5 waves down. We have 3 waves up. We have pushed into that 78% retracement this week again. I thought we had the wave C high in place earlier this week, seen as we had 3 waves up and a pretty full trend channel. So, my heart is still, or my head is, I suppose, on the fence right now, seeing as we're so darn close to that all-time high. Maybe it'll be too much for people to kind of resist right now, but we'll see. You know where my heart is on this one. I think it's a 1-2 pattern to the downside, but my head is still sitting on the fence as usual. Okay, so let's see. Just like the Dow, is this a second wave bearish lower high? Do we have head and shoulders in place? And are we going to downdraft again, like a kind of waterfall move down into a third wave? We shall know soon enough. Okay, silver. Looks like we've topped out at the B wave, and we seem to be putting in a series of 1-2s here off the recent high. If we go to the hourly chart here, we have a reasonable 5-wave move down, and then a really convoluted second wave, which seems to be a triple combination wave of some sort. And then we have a small 5-3 pattern again off that second wave high. So possibility is that we are edging towards again a third wave move lower. Again, in so many markets, that this kind of topping and rolling to the downside again seems to be appearing. So silver has been heavily bought over the last couple of months, and here we are sitting back. I didn't think we'd get back this far, but here we are again, back up towards the high end of the 20s. Is the same thing going to happen again that happened the last time? Yeah, my money's there, but it still has to come. It's all well and good me saying that I think a C wave is coming, but it hasn't started yet. So let's see if this 5-3 pattern off the high develops into an acceleration lower next week. We'll see. And we maybe finally have able to confirm wave C down. Let's have a look at Bitcoin. So Bitcoin headed lower again today. Not quite sure if wave 4 is done yet. I've been kind of, what did we reach the we got 64,000 back in April. Interesting why it was almost 65,000 back in April, and we crashed $35,000 in 1 month. You know, that's quite a crash. We seem to be stabilizing here at the moment. Maybe it's enough for something else or something bigger to come along. I'm not quite sure on that yet. But the other side of the equation is maybe that's enough to completely burst the bubble. That's another possibility. I was looking at this kind of flat correction possibility here for wave 4, where wave C would come, back to challenge 42,380, let's say, and then head lower into a fifth wave. So we had an ABC pattern on the cards. Maybe now we're moving into some sort of a triangle. Maybe we'll complete, 5 smaller waves in a triangle, and then head lower into wave 5. So if we continue to hold this slightly creeping lower highs here, it looks like we're heading in a fourth wave triangle, and we should head lower into a fifth wave. And that fifth wave depends on how far down we go. I mean, we could break 20,000 in wave 5, and that'll be wave 5, either of A or 1. So we'll see on that one. But for the moment, I'm no longer receiving emails about Bitcoin. That kind of tends to be a kind of it's not an ironclad, how would you say, not an ironclad indicator, but when I start receiving a lot of emails about a certain point of view, that kind of does usually coincide with a turning point, either to the bottom or to the, either a bottom forming or a top forming. So I did receive a lot of emails about Bitcoin, a couple of months ago, and I'm not receiving them anymore. So could that long-term top be in? Well, who knows? Speculative bit can always come back in, but so far we've got 3 waves down, and the possibility of a fourth wave triangle developing. So if we finish a triangle over the weekend, or Monday, and we start breaking again these small interim lows, then it looks like we're heading into a fifth wave down. Okay, let's see. FTSE, we haven't done much really worth talking about in the FTSE this week. It seems to be, well, the price has formed a kind of a wedge. So maybe it's a triangle. I don't know. Could also be a series of 1-2s, because we had a pretty impulsive move down late last, or was that early this week? No, late last Thursday, Friday, and then we're still sitting at corrective lower highs. So we'll see whether this develops as a 1-2-1-2 down into a third wave, or if it's a triangle and we make another high. I'll go to the Nasdaq again. There is, it's shown on my short-term chart, the possibility of a series of 1-2s down. There is also the possibility that we have a 5-wave pattern lower, and this is only wave 2 forming right now. If we go in here, I'll show you. This could be wave 1. We could have a second wave, a failed second wave there. So this could be wave 2, or I would probably go to a lower degree there. We'll go wave 1, wave 2, 3, 4, and 5. So this is one possibility. I had discounted it because the wave 1 low and the wave 4 high came very close. They didn't break, but they came very close. You could also go with the idea that this is a 3-3-5 pattern. For the moment, I'm going to stick with the, you know, I have cornered the market on bearishness, so I'm going to stay with my bearish outlooks. There's no reason why, if I think the S&P and the Dow are topping, there's no reason why the Nasdaq would be screaming to new highs again. So if that's 5 waves down, then this is 3 waves up. I was counting this as a 1, 2, 1, 2. So given the fact that this second wave here has kind of extended and overextended, there is a possibility that we are actually developing a larger bearish impulse wave. So let's see if that resistance there at 13,800 or 820 comes into play, and then we head lower again into a third wave. So let's see how that plays out. Okay, it looks like we're done. Thank you so much, guys, for being with me during the week. Thank you for everybody on the other side of the screen there watching the video. God bless you all. Have a good weekend. You know, if you haven't already, maybe look into the Messiah. There's no harm. I'm a believer, and I think big things are coming our way, and they are not good things. So it would be good to be on the side of the Almighty, in my book, anyway. So thank you again for watching. Have a great weekend. Have a blessed weekend, and we will see you again on, well, you awesome guys at the website and gals. I will see you for tonight's update, and everybody else, you know, God bless. Maybe our paths will meet somewhere, or maybe I'll see you in the air. Okay. Good night. Bye-bye.